Has already started to change the way the world lives and works. The media and entertainment industry is one area that is seen as significant leaps. Areas that were once separate, entertainment technology and telecommunication industries, are now combining together more and more, as is reported in the PWC Entertainment and Media Outlook 2018 to 2022, an African perspective that was released this week. Earlier we spoke to Charles Stuart, the director at PricewaterhouseCoopers.
This report, it comes out every year, and I must say I'm one of those that look forward to looking at it because it affects us one way or another. And I just wonder, what are the key highlights of this year's report? What are your findings?
Well, Peter, we're into the 9th edition of the Entertainment and Media Outlook, which is quite nice. We've been through almost one whole cycle. 2017 was a pretty tough year on both the political and a macroeconomic level from a South African perspective. And so we saw a relatively low year-on-year growth rate of only 6.8%, which saw the market reach 129 billion rand in 2017. Looking forward to 2022, we see growth of about 6.5% on a compound basis. And that's going to see the market reach 177 billion rand in 2022. And the majority of that growth is coming in the digital space. And I think that's the big tipping point that we're seeing, is in 2020, overall digital spend is going to overtake non-digital spend for the first time.
All right, so one of the key words that keeps coming through is convergence. Take us through that. What does that mean?
Well, I think if we think about media, if we think about technology, we think about the space that telcos are playing compared to traditional media companies, there's just everybody's sort of gravitating towards these converged business models. One of the examples we like to talk about is, if you think about Amazon, which started off as an internet retailer, you think about Disney, which started off as a content factory, Netflix, which was a DVD rental by mail business. They are now all simultaneously content producers, distributors and retailers all at the same time. And that's the type of convergence that we're seeing in the live sports industry, which is something that's obviously close to the SABC's heart. We're seeing that you've got various players from various different camps now after the live sports rights. Twitter last year acquired live sports rights to the NFL in the US. BT's just acquired sports rights to the EPL. Now that's a social media platform, and it's a telco. So we really see convergence in terms of the players that are now competing are not the same, to what we've seen in the past.
So I'm trying to figure out, so it's one of these chicken egg type scenarios. Does the technology drive the way that consumers end up consuming the products, or is it the other way around, that the products, they're coming up with just different ideas and they look for a technology that works for them?
So the technology is invariably, it's a pipe to the consumer. And it's a bit of a virtuous circle that as more and more people have access to technology, and we see in South Africa, for example, smartphone connections currently sitting at 43 million. That's going to double, 86 million smartphone connections by 2022. So more people are then online. Connectivity is improving. So you've currently got only 63% of internet connections being 3G and above. That's going to get to 90% by 2022. And 4G is also growing. So as more and more people come online, so more and more people and e-commerce and other players in the market want to be online, and as they come online, more people want to be online. So it becomes a virtuous circle. So I don't think that pace of change is going to let up anytime soon.
You talked about these growth rates. When we look at Nigeria, Tanzania, Kenya, they seem to be doing much better than us. What's dragging us back?
Well, they are doing better, but remember that South Africa is a more mature market. So from a market size perspective, yes, Nigeria is growing at 21.5%, over the forecast period, but currently their market's a lot smaller. And also a lot of the growth that's happening in those markets is happening in the internet access space. So whilst a lot more people are coming online, from a pure entertainment and media spend perspective, it's still quite challenging, because whilst they're paying for the access, they're not necessarily paying for the content that comes with the access. So that's one of the challenges that E&M companies need to figure out in those markets is, how do they actually monetize all of these new people that are coming online and starting to consume entertainment and media products. But at the same time, it is exciting. And because they're coming off lower bases, they are growing at faster rates.
All right. You talked about online and connectivity, but I think I read in your report as well, is that there's going to be less of a dependence on being connected to get some of those revenues.
Well, I think the move to digital. So we are seeing some growth in the non-digital space. I think there's going to be a great dependence on being online, because the access to the to the mobile consumer. And if we look at Africa, it's a strongly mobile story. Everybody is using, and we were just talking a little bit earlier about a mobile phone. You know, for people, it's their access to talk to people, it's the access to watch content. So being online is going to be very, very important. The real challenge and the success is going to be driven by how companies and, you know, telco providers can actually ensure that that access is affordable. Because I think that is one of the inhibitors that we have in South Africa and Africa, is that our data costs are still very, very high.